If you're a bank that is crossing a border, if we really want to see competition be pan-European, then you need to be able to access EIDs, because otherwise how do you verify customers? And I'm sure if you ever moved country in Europe and you're trying to get a new bank, that is a painful process. But if they had an EID solution from where you came from, actually they could identify you as easily as they could identify, in this case, a Swedish citizen. You know, that onboarding would be seamless. It would be like that. Right. And so that is critical infrastructure that we really, really need to be able to scale. So I think therefore we will see innovation move much faster in the Nordics, where we already have the infrastructure, than we will see in some other markets across Europe.
Philip, it's great seeing you again. Thank you so much for taking time to speak to us.
Likewise, great to have you.
Please, just for those who haven't had the pleasure of meeting you, just tell us briefly who you are and what you do.
Sure. So my name is Philip Konopik. I am the Regional Managing Director for Visa here in the Nordics and Baltics. So effectively I look after all our business and business development in the Nordic and Baltic region. Okay,
great. Now, last time we met, which was about a year ago,
yes.
We discussed a lot of the things that were happening in payments, and we've seen a ton of innovation in the last 12 months.
Yeah.
My question to you is, how much of that innovation has come as a result of open banking?
A lot of it, and I think it kind of falls into two camps, right? So you have effectively what's been driven, innovation driven by new ways of paying through open banking, and of course the innovation that's driven by the access to new data that open banking has opened up. So if you start by looking at the payment side of it, the ability to pay from account to account, or what we call pay by bank, I mean, that's really started to get some level of maturity now across the most of Europe. It still has a long way to go. I think even though we see real-time payment systems there enabled, like SEPA Instant, the maturity of it is not always there. It's not ubiquitous across the market. So even if some banks are able to send, they might not be able to receive instant, or vice versa. So you don't have a perfect coverage yet, but it's coming. So when we look at the payments innovation that we've seen in the last 12 months, say, it's predominantly in payments that aren't instant. So invoice payments, for instance, are very, very easy to translate into sort of open banking payment solutions, and that's where we've seen a lot of innovation happening. The other side is the data services, and here we've seen innovation predominantly improving the existing services provided by a lot of incumbents. There are new, but a lot of improvements have happened. So for instance, if you're looking at the ability to do risk decisioning on a customer, right? What's their exposure? Can we offer them an existing loan or a new loan? How do we onboard customers? We can immediately check their account. We can verify their identity. Now that ability has accelerated the ability to onboard new customers and improve the conversion rates. We look at affordability checks and income checks. So where's the income coming from? Is it stable? It's from multiple sources. What's the affordability of this customer to take on new loans effectively? So that ability to add current data to the traditional way of doing credit assessments is fundamentally changed the way that banks and new providers are able to offer credit to consumers and to businesses. And then you got money management in addition to that. So not necessarily a new service, but again, the wealth of data, the ability to aggregate multiple accounts has given consumers and businesses a better understanding of their financial lives. And also given banks and the businesses that service them the ability to be more value adding in their engagements. So when you say, you're running out of money, or you might not be able to pay this bill, or actually it looks like you have a surplus, maybe you want to put that into savings, or maybe you need a short-term loan, or maybe you want to break this payment into installments. All of that kind of helpful engagement has been enabled by the ability to aggregate and analyze that data much better. And probably finally, the ability then to also use that data for new insights, and particularly sustainability has been super exciting in that space. So the ability to take the open banking data and say, actually, do you understand what your sustainability impact is as a consumer, or even as a business on the transactions that are being made? what is the, what are the services and the products you consume, and what the carbon footprint created by that? How can you change that potentially to become more sustainable? And if you can't change it, what can you do to offset to essentially create a more carbon-friendly footprint? So all of those things are key innovations that have sort of improved efficiencies in the existing system, reduced costs and add more value, and all of them driven by open banking.
Right, so if I understand correctly, so there's innovations in payments, there's innovations in money management, in data availability, and also in sustainable tracking.
Yep.
But it's there, but it's not evenly distributed as of yet.
Absolutely, yeah.
Right.
So I think we're really at the beginning still. Like, even though we say, we've had open banking for a long time, and we think we have been at the forefront of open banking innovation for the past 10 years. Like, imagine it's been 10 years, and we still say we're really just at the beginning of what this is going to be able to do.
Yeah, all right. You mentioned that the customer is getting a lot more value from the services that they get from financial institutions. And we know that convenience is one of the things that open banking adds to them. Yep. We also know that open banking is increasing the channels to market for financial institutions. But I'm keen to know, what's your opinion about the creation of new business models? How is open banking enabling that?
Yep. So there's no doubt that there's a lot of value in open banking. So a recent study by the European Commission showed that by 2025, open banking will have enabled what we call sort of the open data economy, which in Europe would be worth around 550 billion euros. So big, right? So there's value there to be had. What we've seen to date, as I described, is predominantly improvements of existing propositions. But it's also enabled some new. So I'll cover those. I mean, we talked about risk decisioning, affordability, income check, onboarding, money management. You could argue those are kind of traditional models in a lot of ways. I'd say sustainability is definitely a new one. That's a new model and a new business model that has emerged and that we think has a lot of growth ahead of it. But then I'd say it's also things like what's happened with embedded finance. So if you have specialist lenders, their business model would effectively not have existed unless they had access to this data. So they are fundamentally enabled by it. There's a great example in a Swedish fintech called Froda that focuses on SME lending. Super exciting, fully automated. They can actually take the open banking data, make a credit decision in a couple of minutes, offer the money back to that business, essentially immediate credit assessment and lending. And that kind of proposition would not have been enabled without an open banking access. So that's a great one. Another one, a personal favorite of mine, is if you look at payment specifically, is Kivra in Sweden. Again, Swedish fintech. They went from only over a few years from sort of having nothing to now over 50% penetration in the Swedish population have Kivra, which is effectively a digital mailbox, not an email, a digital mailbox for all your important papers like tax papers, from the healthcare, from insurance, and also bill payments. So any bills you effectively receive, you can receive into your digital mailbox, and you can pay it immediately from there. You can decide to pay it now, you can decide to pay it on the due date using open banking, powered in this case by Tink. Right. Fantastic consumer proposition, really user-friendly, and have driven a huge amount of value. So those examples, I think, are brand new business models that didn't exist before open banking. And then, of course, if you want to access open banking, you do need aggregators. You do need a Tink or a TrueLayer or a Plaid to access. So again, those businesses would not have existed unless for open banking, because they fulfill a purpose and they fulfill a service to the market now. So those are some examples of brand new business models that have come. But again, I think we're just scraping this surface of this at the moment. And as particularly the payments capability becomes more mature, since you can really count on a payment to become instant, then you have the ability to really scale into more types of use cases. Also sort of face-to-face or e-com immediately, where I think today we're not quite there in terms of maturity in most markets. In some markets, yes, but not in all markets.
Okay, well, definitely it's super exciting to see what's happening. I'm also keen to understand what's happening at the revenue stream level, especially when we look at the possibility of monetizing APIs.
Yeah. So I think that's the tricky part, right? Because from the banking perspective, you're not able to monetize the APIs that you offer out. And I think that's been a kind of a fundamental challenge with PSD2. And it's driven, there's a lack of incentive for a bank to offer really, really best-in-class APIs to the marketplace if they can't see any real value from it. So that is a challenge. Although I do think that we're now seeing some innovation happening around actually how can we create revenue streams around open banking. Even if we can't monetize the specific APIs, we can monetize other things. And one great example is, I think in terms of payments. So if you have really tight payments initiation APIs as a bank, your ability to offer those to players that want to do maybe P2P payments, you can then delegate authentication to those players and you can charge for that. So it's a roundabout way, you're kind of charging for the payment by virtue of giving delegated authentication. It's a way to commercialize the API. But truly for this to take off, the need for commercial APIs is absolutely there. And the payment APIs that we have today in open banking, the standardized APIs, they fulfill a very slim part of payments use cases. So for this to really start to become something huge, we do need the ability to do recurring payments, sweeping payments, the ability to effectively delay payments, the ability to have more of a conversation between providers. And until we have that type of functionality, we don't really expect that this is going to become as big as it can.
Right.
And you also want to see when money arrives, not just when it's sent.
Yes.
So this is the challenge.
Okay, now I find it very interesting that we're still only scraping the surface of what open banking can do because it came as a result of PSD2.
Yep.
But there's a lot of buzz about PSD3. What, in your view, are the main lessons that we've learned from open banking that we can already start applying to open finance and the expansion of open banking principles to the rest of financial services? I'm
going to be a little bit facetious, but the learnings from PSD2, I think, is, it was a lot more expensive to do. It took longer, and it didn't really deliver on the vision that was intended. Right? So let me unpack that a bit in terms of what it might mean. I mean, it took longer because the regulation was very prescriptive, right? And prescriptive regulation meant that there was a lot of interpretation required and understanding of, well, what exactly does that mean? And exactly how do we have to do it to be compliant? Versus regulation that is outcome focused, which says this is what we want to achieve, we're not going to prescribe exactly how to do it. So the difference into these two is, I think, a super important lesson from PSD2 to PSD3 for the regulators in particular and for the ecosystem to lobby for regulation that is outcome focused, not prescriptive of what the solution is. Because otherwise you are effectively limiting innovation and it does slow down the evolution of the change. So that is one thing. The other thing in terms of speed is creating an incentive model. So if you're removing the incentive model for the system to be able to create some kind of revenue from this model, then you're essentially stifling innovation again, because you're saying there's nothing in it for you, so you're going to do the bare minimum, right? And again, if we're too restrictive in what can and can't be charged, then we're limiting innovation. In the marketplace itself will define the level that it's prepared to offer those services for. So that's another challenge. So those are learnings. And then in terms of, what's the impact of open finance? What can we expect in terms of that evolution? I think it's going to be a much bigger evolution, or revolution maybe even is a better word, than PSD2 was and open banking was. And the main reason for that is it's not in the same way an ecosystem shift. So PSD2 delivered a lot of great things: secure customer authentication, open banking standard. But open finance doesn't have to wait for everybody to get on the train, right? Open finance will move at the pace of the fastest innovators. And then you could argue that today you already have open finance, right? There's nothing holding back the industry and specific players delivering open finance. And truly embedded finance, is lots of examples of. So embedded payments, embedded banking, like all of those already exist. So when we go to open finance, I think this is the true fragmentation of the banking services on the incumbent players. That's going to be much, much more disruptive to how we access financial services, insurances, payments, anything related to it, lending. If you no longer need that from a single provider and it's offered to you when you need it in the right use case, then actually that is where real disruption will happen. In addition to access and consumers' information, you need to be able to verify that customer. And actually in Europe, electronic EIDs, also EIDs effectively, bank IDs or similar, they are not developed, they don't exist in a lot of places. So if you look at the Nordics, you have incredibly strong solutions that have been here for 10 plus years. They're really embedded in all aspects of sort of society. But in the rest of Europe, that doesn't exist. And now the Commission is working through projects to drive that. But that's probably going to take 5+ years to get really to scale. So that, in a way, is going to be one of the things that holds back open finance and some of the innovations that we would like to see, and the scalability of some of the innovations that we would like to see.
Right.
Because if you're a bank that is crossing a border, if we really want to see competition be pan-European, then you need to be able to access EIDs. Because otherwise, how do you verify customers? And I'm sure if you ever moved country in Europe and you're trying to get a new bank, that is a painful process. But if they had an EID solution from where you came from, actually they could identify you as easily as they could identify, in this case, a Swedish citizen. That onboarding would be seamless. It would be like that.
Right.
And so that is critical infrastructure that we really, really need to be able to scale. So I think therefore we will see innovation move much faster in the Nordics, where we already have the infrastructure, than we will see in some other markets across Europe.
Yeah, makes sense.
It will happen.
All right. Well, very much looking forward to that.
Yeah.
All right. Let's shift gears. Let's talk about our favorite subject, which is the customer.
Yes.
I'm keen to understand, in your perspective, what can Visa's customers look forward to having in terms of an improved customer experience and how they experience their financial activities?
If you believe that the data is the new gold, right, and we do that, then the biggest challenge is how do you unlock your data? And a lot of our customers, a lot of incumbent organizations, they struggle with legacy systems, right? So it's easier said than done, right? Both internally and externally. Maybe mostly externally, but even internally, it's a challenge, because you're probably going through re-platforming, trying to consolidate systems. You might have done acquisitions where you have multiple platforms. So how do you solve for that? You're trying to keep on top of the increasing regulatory burden of compliance. And so your ability to then also add on things like, well, we're going to try and make all our data open, both internally and externally, and leverage that to drive innovation. It becomes kind of a really nice to have, but it's going to have to wait. So the challenge of unlocking data is really large. And if you can't unlock data, you can't really drive innovation. So the way that we approach this is, how do we help our customers do that? And open banking has kind of been the starting point of that. So you've started to expose your data by enabling it via APIs to a third party. Right? Now, the way that we think about this is, well, that third party should be able, in this case, what we're looking to do with Visa and Tink, is to create a platform. So while we consume the data, enable the data from the banks to be exposed, we can then plug in additional services straight into that. So rather than having independent companies and providers coming in with innovations and they have to integrate separately, we can become that integration layer via a player like Tink. So suddenly you're accelerating innovation because you're opening up that data layer. And the first example of that is what we're doing with Equalytic, which is a sustainability platform, right? Service. So they're integrating straight into Tink, which then integrates into multiple banks, and those banks can effectively immediately consume the services of Equalytic and offer that to their consumers. So what does that mean to the consumer? Well, it means that if you are an incumbent player, a bank, you can have immediate access to innovation, right? At lower cost and at much faster speed. So, happy days, right? And for your customer, that obviously means that they can get benefit from that innovation in the services that you offer to them. It also means that you can be, I suppose, more decisive of where do we actually invest our money in terms of the innovation that we offer in-house versus the money that we consume from elsewhere. Because if the cost is going down, the speed is increasing, then what we need to focus on, our resources, we can put on the value-added services that we believe give the most value to our customers, where we differentiate, because we can consume all these other innovations from the market and from our partners. So in terms of what we envisage for our customers and their customers in turn, is really that ability to drive innovation through the opening up of data and becoming the link between the two.
Right, it was innovation as a service type of engagement.
Yeah. That's the way to describe it, absolutely.
Okay, now just to close. We started by talking about open banking and how it's taken 10 years to get to where we are today. And we know that a lot of the innovation we're seeing now started years ago.
Yep.
So my question is, what is Visa working on now that will hit the market in 3 to 5 years?
Yeah, so I'll mention a few that I think are sort of top of my mind that I'm quite passionate about. One is bill presentment. So if you think open banking has enabled new ways to pay, and I think increasingly we're seeing fragmentation in ways to pay, but the communication between two parties around how you pay an invoice, particularly in the B2B landscape, is still very traditional. It's like the 1.0 of digitalization, Here's the invoice, pay it on the due date. If you don't pay, if I haven't received the money, I'm going to be chasing you, and it becomes a nightmare, right? But with the new request to pay standards that's been implemented now, we have the ability to create a conversation between parties as a part of receiving an invoice. And that solution in bill presentment is something we're developing now, and we're going to look to scale over the next few years. And I think that's going to be quite revolutionary because it can fit in so many places, right? Effectively imagining what Clearware is doing today, but at the same time you have the ability to say, well, actually, I can't pay right now, so I'd like to delay this payment, or I'd like to split this payment, or I can part pay now, and then I'd like to put another one down the line, or actually I want to move the whole payment down the line. So this ability for communication and a flexibility in how you manage invoices, and even providing credit around invoice payments and bills is a really big thing. So excited about that. Then I think buy now, pay later, it's kind of had its peak and come down again. I think we're going to see a next wave of it. I think we're going to see buy now, pay later integrated as a service from many providers as a part of their the service that they offer to specific segments, not only consumers but also businesses. I think it has a really interesting role to play in for SMEs in particular, enabling them to manage their incomings and outgoings much better and giving them kind of a liquidity-based solution. So we will definitely see that, and we're working on a number of solutions in that space. The Think solution I mentioned is sort of the ability to connect innovation and data. That's a key thing. So we've started that with Equalytic, and we're going to keep adding new services onto it. So Think becoming a platform for data and innovation is another big thing that we expect to scale. Then I think the commercial APIs is probably a final thing. As I mentioned, PSD2 has delivered some of the innovation of the vision that was intended, but a lot of the APIs that were needed to fulfill more advanced payments use cases. So if I'm paying for something online and I want to make sure that the money's arrived as a seller, like how do you enable that? How do you enable a recurring payment using open banking? That functionality doesn't quite exist yet. That's what we're building now. And I think over the next 5 years, working with ecosystems to essentially scale those solutions, that's going to be super exciting. And that's really when we see sort of the promise, the vision of PSD2 and open banking in terms of payments really being fulfilled. So I think that's going to be super exciting.
Indeed. Philip, always exciting listening to you. Thank you very much for your time.
Pleasure.
And again, we look forward to seeing you in September. I'm very excited about your keynote, so I'll be there in the front row, just making sure that I capture everything.
Yeah, my pleasure. Looking forward to it as well. Thank you very much.
Thank you.